Most age pension recipients doing a little part-time work have no idea they are sitting on a hidden credit worth up to $11,800. And if they do not use it wisely, they could be handing money straight back to Centrelink without even knowing it. Welcome. If you are receiving the age pension and still working a few hours a week, whether at a local shop, doing some gardening, or helping out in your community, this video could save you from losing a significant amount of money. Today we are walking through everything you need to know about the work bonus in 2026, what it is, how it works, how much you can earn without losing a cent of your pension, and the one big mistake thousands of pensioners are making right now. Here at Centrelink Pension Bulletin, we make sure you never miss out on what you are entitled to. So grab a cup of tea and let us go through this together. The work bonus is a special rule put in place by the Australian government for people of age pension age who are still doing some paid work. It allows you to earn up to $300 per fortnight from work without it being counted in your income test for the age pension. That is money straight from your job that Centrelink will not touch. $300 per fortnight might not sound like much on its own, but here is the part that surprises most people. Any unused work bonus credits accumulate in a personal bank, up to a maximum of $11,800 as of 2026. If you are not working in a given fortnight, those unused credits do not disappear. They stack up, carry over, and wait for you when you need them. This applies whether you are single or part of a couple. Each partner has their own work bonus of $300 per fortnight and their own work bonus bank up to $11,800. If both partners work, both can benefit from the exemption independently. Now let us talk about what actually counts as qualifying income, because this is where many people get confused. The work bonus applies automatically to eligible employment income. You do not need to apply for it. Centrelink applies it for you. However, passive income from investments or rental properties does not qualify. Wages from an employer are absolutely covered. Self-employment income also counts as employment income and is eligible for the work bonus. If you own a business, the business income after deductions is treated similarly to wages. But there is an important rule. Self-employment income is eligible only if the work involves active participation, work that involves actual effort, such as bookkeeping or plumbing. Managing an investment portfolio or an investment property does not count. In simple terms, if you are rolling up your sleeves and doing real work, you qualify. If money is coming in passively, it does not. Here is the part most pensioners are completely unaware of, and it could be the most valuable thing in this entire video. A pensioner who has built up the full $11,800 bank can earn that entire amount in employment income without any pension reduction at all, regardless of when the work occurs. Think about what that means. If you spent several months not working, your work bonus credits were quietly building up. Then, when Christmas casual work comes around, or a short-term contract, you can draw on all of that built-up balance and still receive your full pension. That is not a loophole. That is exactly how the system is designed to work. Let us make this real with a simple example. Imagine Margaret. She is 71 years old, receives the full age pension, and works a couple of shifts a week at her local cafe, earning around $250 per fortnight. Because $250 is below the $300 limit, none of that income is counted by Centrelink. Margaret keeps her full pension. She keeps her full wages. And $50 of unused work bonus quietly rolls into her bank every fortnight. Now imagine Ron. He is 69 and does not work most of the year, but every December he takes on Christmas casual work and earns $3,000 or $4,000 that month. Because Ron has been accumulating his work bonus credits all year, he can earn a large amount in a short time without losing his pension. His work bonus bank absorbs the impact. Two very different situations, same powerful protection. Now here is a question we are often asked. How does the work bonus interact with the regular income test-free area? A working single pensioner can effectively earn up to $518 per fortnight before their pension starts reducing. That is the $300 work bonus combined with the $218 income test-free area. $518 per fortnight. That is over $1,000 a month before Centrelink reduces your pension by a single cent. For most part-time workers on the pension, that covers their entire fortnightly earnings with room to spare. Now we need to talk about something that is not optional, reporting. Employment income must be reported to Centrelink every fortnight, even if the work bonus means it has no impact on your payment. If your income changes, update Centrelink promptly. This is a legal requirement. Failing to report, even accidentally, can result in an overpayment, which means Centrelink asks you to pay money back later. That is a stressful situation nobody wants. The good news is, reporting has never been easier. You can do it through your MyGov account online, the Express Plus Centrelink app, by phone, or by visiting a Services Australia service centre in person. Centrelink receives data from the Australian Taxation Office, banks, and other agencies and cross-matches it regularly. It is far simpler to disclose everything up front. So please, always report honestly and on time. There is one more bonus that new claimants especially need to hear. Depending on when you claim the age pension, you may also receive a one-off $4,000 credit to your work bonus balance. This immediate boost is designed to give new pensioners who are transitioning from full-time work a head start. Right from the very beginning, you have a meaningful cushion protecting your pension payments. If you have recently started receiving the age pension and are still working, check with Centrelink or a financial information service officer to confirm whether this $4,000 starting credit has been applied to your account. Now let us quickly cover what does not qualify for the work bonus, because this trips many people up. Rental income, not eligible. Your super drawdown, not eligible. Interest from bank accounts or managed investments, not eligible. Dividends from shares, not eligible. The work bonus applies to eligible employment and gainful self-employment income, not deemed investment or passive rental income. Only income earned from doing actual work qualifies. And here is a final thought worth sitting with. Many older Australians are choosing not to work at all because they are afraid of losing their pension. But the work bonus exists specifically to prevent that from happening. In 2026, updated rules allow pensioners to earn more before payments are reduced, with greater flexibility for part-time income. The changes are designed to encourage older Australians to stay in or re-enter the workforce. Staying active is good for your finances, it is good for your health, and it is good for your sense of purpose. The system is on your side. You just need to know how to use it. Let us finish with a quick checklist. You can earn up to $300 per fortnight from employment before any of it counts toward your income test. Unused credits build up in your work bonus bank to a maximum of $11,800. As a single pensioner, you can earn up to $518 per fortnight before your pension reduces at all. If you are part of a couple and both work, each of you has your own separate bank. Always report your employment income to Centrelink every fortnight without fail. Check if you received the $4,000 one-off starting credit when you first claimed. And remember, investment income, rental income, and super drawdowns do not count as work bonus income. Knowledge is protection, and that is exactly why we make these videos. If this helped you today, please give it a like and subscribe to Centrelink Pension Bulletin so you never miss an important update. Drop your questions in the comments below. We read every single one. Next video, we are covering what happens when your earnings go above the work bonus limit and how Centrelink calculates the reduction. You will not want to miss it. Until next time, you have worked hard your whole life. Make sure the system is working just as hard for you.